base with Mr. Ajith Kumar Rai, the chairman of the company, now joining us live to talk about the road ahead. Thank you so much. Let's get straight down to it. If you were to see your first quarter numbers and the updates that have been provided, the main pain point really seems to be about the light duty cable business. It's a bit negative. The street is watching out for when this is going to turn positive. Any guidance you can provide us on that front?
Good morning, and thank you for having me on your channel. The LDC business that you mentioned, light duty cable business, is a new business which we have just acquired from Kongsberg Automotive, which is a global auto component giant. And this business is exclusively for light duty cables, which is the business that we are doing, currently as well. So it's an addition to our capacity and with new customers and global manufacturing footprint. It has just come under our fold from 1st of April. So it's a new business for us, and we are cleaning up the balance sheet, cleaning up the inventories, cleaning up the systems there. So for the first 2 quarters, we have guided in the beginning itself that it would be an EBITDA negative business, which will eventually lead to a 10% EBITDA business over the following 3-4 quarters. So yes, that is a stated fact. So it is just that one part of the business which is newly acquired has its starting pains, and I think given a couple of quarters, we should be perfectly fine with it. And overall, the business otherwise has performed perfectly well.
Thank you for giving us that guidance. So you're cleaning it up. It's post a strategic acquisition. Should become EPS accretive sometime in FY24. Now, if you were to look at the company, there are manufacturing hubs in Europe as well as China. We can talk about the recession, the fears of recession, soft landing, hard landing, but there is also a energy shock of sorts. In China, already we've been seeing power being sent from factories towards residential premises. In Europe as well, need to brace ourselves for an energy shock the way it's happening. How will that impact your operations? How will it impact your business?
It's indeed a good question. I think globally, just to give a little macro perspective, US has degrown the volumes in the last 2 years. Even this year, it will be a degrowth from 2 years ago. So is Europe. I think Europe is also degrowing this year. Of course, it's been accelerated this year thanks to the Ukraine war, and also basically with issues relating to port, congestions and chip shortages, etc., etc. But what is important for your viewers to understand is that Suprajit has been in a position of garnering significant new businesses. Despite the businesses, the customers are degrowing, we have been able to clock some fantastic new businesses, which is adding to our top line as well as to our bottom line. So despite the degrowth that we are seeing and the recession that has been talked about, we are expecting to grow in double digit in our global business, which clearly says that we have been winning businesses from the competition, and we are winning quite a few new exciting orders from the customers.
The new business, is it coming at better rates, better margins?
Fortunately, at a much better prices, much better margins. Historically, the prices that we have had, you must understand, we also had the impact of subsequent price increases of input materials. So the new contracts are in a perfectly good margin positions. So going forward, we feel that some of the minor deteriorations in the margin that one might have seen, 100 basis point here and there, will be more than overcome given a reasonable time of a year or so, when these new contracts hits production lines.
While, we always tend to think that Suprajit means auto, but 40% of your business is non-auto. That business does not have a chip shortage. That business does not have a disruption or a European angle. What's happening there?
No, actually, chip shortage is everywhere. In fact, the John Deere, which is one of our biggest customers, we are having a biggest problem of chip shortages. I think, these electronics parts are part of everything today in our life. So I don't think there is any place which is not affected by these chip shortages. But having said that, we have been able to cover the chip shortages fairly well with our vendors on a long term. Of course, there has been some, starting pains. But having said that, now I think the chip shortages, although still continue, I think we are in a much better position to deal with it because we have all now got into long-term contracts. And I think we are in a reasonably good position to deal with the chip shortage as such. And to come to your point, yes, I think non-automotive is about 25, 26% of our business. And what's important also to tell the viewers is that we have been all felt as a two-wheeler, auto component company. Today, two-wheeler part of our business is just 25%, and automotive has gone to about 35%. So the entire product mix has been much more well diversified today at Suprajit, which will, I think, yield a lot of good results going forward.
Great to have you on the show, and thank you so much for taking the time out.